Hey, Mike here. Some stuff going in the market. I've got to comment on it. People are getting excited about stocks. The Investors Intelligence Survey shows 52% of the people are now bullish on the market, and the number of people bearish is at a point so low it wasn't even seen last year. We're seeing sentiment survey results that we're seeing at the peaks last year, the two peaks that led to corrections. And I think that's a troubling sign. And you can see this bullish sentiment all over the news. This is Yahoo Finance, and just look at the headlines. S&P 500 hits 1,500 for first time since 2007. They invite you to click to see the quote for yourself. A daily ticker article with the headline, "This is what a bull market looks like. Here comes the buying opportunity of a lifetime." And if we look at this, click to that link, you'll see this guy here. I don't know who he is. Lamoureux, I guess that's how you pronounce his name. President of Lamoureux and Company. I suppose that's some investor advisory company or something. But he says right now is the second buy of a lifetime. And according to Yahoo Finance, he sees a double for stocks the next few years. Over the next 6 months, he says Europe's going to collapse and cause a spike in European bond yields that's going to cause people to escape Europe and escape European bonds and pile into the United States stock market. And he thinks that's going to make stocks double over the next couple years. Well, I'm going to tell you that that's an insane forecast because Europe is starting a new bull market as we speak. As you know, I've been in European stocks now for several months, and I'm making a lot of money in them. And I believe they're going to go up even more. But the important thing, though, is, and why I'm telling you all this, is I just want to make a note of the type of headlines, the type of talk that's now going on in the financial media. When just a month ago the media was in a panic over anything, and they were talking about the fiscal cliff stuff, now media sources are excited about the market and saying such insane things that this is a second buy of a lifetime. Well, that's wrong. Buying opportunities don't come when the market's already gone up for 4 years, and we're in years of, what is this, 2008, 9, 10, 11, 12. This is the fifth year, 8, 9, 10, 11, 12. We're going into the fifth year of the cyclical bull market for the United States stock market. No, I'm sorry. Buying opportunities come after bear markets, and they come when people are scared. And I pointed out to you just the other day that Greece was the top performing stock market of the past 12 months. And if you would have bought 12 months ago, this is what you saw on television when it came to Greece. You saw riots. You did not see headlines like this about second buying up points of a lifetime in the financial press. And these type of things are all over the place. Let's go. I don't know what's going to show up, but let's go to CNBC.com and see if we got similar headlines. Well, here we see job numbers are good, but still not good enough. Where does the market go from here? Investors ready to put cash in the market this year. All right, let's check that article. Leading indicators rise, top forecasts. The headlines on CNBC are not as crazy as what we're seeing on the other one. Investors ready to put cash in market. Hedge fund tighten. Is likely going to be the year that investors start to move money out of large cash positions and into higher return, riskier assets. In other words, stocks. Where does the market go from here? What are these guys saying? If we stay above 1,500, you could bring some incremental dollars off the sidelines. Bulls need a breakout punch like the S&P through 1,500. We're confirmed to go. Maybe not exactly to the all-time high, but pretty darn close. We're already confirmed for 1525 to 1550. All right, I just want you I'm making this video as I think it's going to be part of the historic record. We'll be looking back at it in a few weeks from now or a few months from now, because it's my view that what's actually happening is the market is in a topping zone. And I don't think we're confirmed for 1525 to 1550 by any stretch of the imagination right now. Last year, in September, we saw tops occur this way. The market peaked out in the middle of September, went sideways for a few weeks, and then corrected. And in November. And in March, we peaked out, went down just a little, bounced back in April, and came down in May. If the pattern repeats, we're going to see the market float around for maybe a month and then pull back for a few weeks. It won't be a big deal. That's not what I'm saying. I'm not saying we're going into bear market. I'm saying you don't buy and go nuts after the market's broken out to tops and everyone's getting excited. You buy after corrections, after pullbacks. And in my view, what we're going to see at some point in the first 6 months of the year is the market, the United States market averages, pull back down to their 150 and 200-day moving averages. From here, that would be a mere correction of about 7.7% for the S&P 500, would be nothing. And if that happens, I suggest what you do right now is hold what you got, be happy with what you got. The market goes up more, enjoy that. But don't buy new stuff right now. Wait, because at some point in 2013, you're going to get that pullback. And that's when you want to buy, that you take advantage of dips. You've got to be patient to do that. You can't get mesmerized by headlines and talk that this is the buy opportunity of a lifetime, which is insanity. So I'm just want to encourage you to be patient in this market. Don't make big bets right now. Save the cash you got to make big bets when the time is right. And if you do that, you can easily beat the market averages. You can beat these guys that I was just showing you in these news stories. And better yet, it's my view that there's some sectors lining up in the market right now, particularly in the commodity complex, that are going to explode this year after the next correction plays out. And you've seen what I've done in Europe, right? Most people that are watching my videos and were getting my information last year were too scared to buy into the European markets when they presented the wonderful true buy opportunity in them. And I took advantage of it. I showed you how to do it, but a lot of people are too timid and too scared to take advantage of Europe. They're too scared of the idea of investing outside the United States. Well, that's fine. I'm not recommending that you jump in there right now either. However, other things are going to line up that most people watching this video feel more comfortable to take advantage of, more comfortable buying. And that's what I'm focusing on now. I'm holding the stuff I've got. I'm happy with what I own. To me, they're long-term positions. And I got a nice cash buffer that I'm sitting on, and I'm going to deploy when the time's right, when the time's really right, not when I'm hearing scare panic talk that you got to buy now on television and on the internet. So I just want to give you a little pep talk. And my reaction, today's S&P 500 move above 1,500 earlier this morning. Right now we're at 1,494. Who knows where the day is going to close at? But that 1,500 move is mesmerizing people, and I got to be a voice of reason and calm in this market environment for you. So anyway, here's today's update, and I'll be talking to you later.